What's up everyone, it's Scotty with MoneyVest. So this is going to be your Magnificent 7 technical update on a weekly basis, which we go over the entire market. I'm going to break down exactly what the technicals look like for the markets here. But in this video, I also want to address one very simple concept because it does, to this day, hurt me from members that I'm hearing, even after being part of our community for a couple years now. There is still a underlying problem which I want to address and get us all on the same page when it comes to understanding market cycles, timing, and this one very important word which holds so much weight when it comes to long-term successful trading and investing, because without it, we are nothing. Without it, you are going to really give in to your emotions and you are not going to be able to control when the markets are moving in such a volatile fashion. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos, and everything is going to be included, as well as our 45 plus tutorials and lectures and private members videos, intrinsic values, and our watch list including our fair values, as well as all the Discord channels and trade alerts and trade ideas. Again, there's over 20 plus channels that you can access and take advantage of, and also do connect with me on Instagram. My handle is going to be CASWRP. So this right here is something that I mentioned on January 23rd, and I think it's really important for me to readdress this because I'm still seeing a lot of folks trying to time the market on a bearish reversal because of how much we've been going higher. I'm still seeing people that are buying puts or are shorting the market or going long on bearish leverage ETFs, and they're absolutely getting burned, and they're still asking themselves a simple question: how high will this market go? Like, why is it, that my puts or my shorts are bleeding? And, how high will this damn Nvidia or semiconductor stocks go? Folks, let me save everyone the time and energy and give you the answer straight. It's an honest answer, which I'm sure you will not find anywhere else, because all people on YouTube, everybody on media, want to try to act like an expert and they know exactly where the markets are going. But the truth is, nobody knows. Nobody has any freaking clue. As much as I want to swear, nobody has any idea where the markets are going and what the stock prices are going to do. Get that through your head, okay? Not you, not me, not any other YouTuber you watch, not another person on media, and they are not going to tell you straight up that we don't know. I'm here to tell you that I don't know, okay? What we are here to assess is not where the prices are going to go, whether prices are buying opportunities today. Okay, it's a constant assessment of the present. It's a constant analysis of where the prices are today. Does it make sense with everything that we know today? Does it make sense to be a buyer, seller of the markets today? That's it. Our analysis is based off of the present situation. I'll give you some examples here in just a minute. But as I mentioned in this post, that trying to time the reversal, okay, is one of the most challenging things to do in the market, especially trying to time a bearish reversal, because markets are generally trending upwards and it's in your benefit to stay and remain mostly long. So I personally don't short the market. I never buy puts. I never short the market. Why? There's got to be a reason why I don't do that, right? And the reason is because I know that generally markets are trending up. Now look, there's nothing wrong with buying puts, like protective puts, if you're looking to hedge your potential downside or if you're trying to protect your profits. There are strategies, right? You can create a collar, you can create protective puts, you can buy puts and of course sell calls at the same time. That's, zero cost collars. You can do a lot of these option strategies, which I'm not going to go over. That's not the purpose of this video, but there are things that you can do to hedge your potential downside and protect yourself. That's different than straight up trying to benefit from a net short position. When I say net short, meaning you are betting on this market selling off. You're betting on the markets to crash. You're betting on the markets to go down. And that's where your thesis kind of rests. That's where you're looking to make most of the money, is when you expect the markets to go down. And that's when the net short position comes in. I have no problem selling calls to hedge my downside, but that makes me net neutral. If the markets go down, great. My calls are going to print, right? They're going to do well. If the markets keep drifting higher, also great, right? The markets are going to keep going up. My underlying stocks are going to do well. That's a net neutral. That's a net, this not a directional neutral sort of position where either way, I'm going to do well, right? And that's why it's the same with hedging, right? If you're buying puts, if you're buying, creating collars or whatever it is, you're creating hedges, you're net neutral in a way that, okay, if markets go down, great, I'm hedged. If the markets keep going up, also great, because my underlying stocks are going to do well. But trying to predict markets that are going to go down, trying to predict that we're going to see the markets rolling over is such a difficult thing to do. And that's exactly the whole idea, the whole purpose of this post was to help you better understand that in general, markets are usually trending up. And so trying to time a bearish reversal is incredibly difficult. It's much, much easier to time a bullish reversal. I mentioned that, remember, timing in general is a bad idea, but if you wish, trying to time a bullish reversal is easier than trying to time a bearish reversal because, as I said earlier, markets long-term are generally trending up. So focus your energy on assessing risk reward better, understanding if the markets makes sense today to buy, hold, sell, de-risk, hedge at any given moment, instead of trying to make a directional bet against the trend. The trend is your friend. Trade with the trend and not against it. And the markets can and will remain irrational much, much longer than you can remain solvent. Okay. Very, very important stuff, folks, because I've heard a lot of stories. I've listened to a lot of stories where people are trying to predict this bearish reversal where the markets are very overvalued, they're overbought, and they want to bet against it in order to make money. So they start shorting the market, they start buying puts, they start going heavy and heavy and heavy. And what does the market do? Keeps on drifting higher. What does semiconductor do? They keep breaking out to new all-time highs, and that's when reality sets in that it's incredibly difficult to try to time the market. So our goal really should be to be patient. And that's the one word that I want to address in this video, that it's a virtue, and patience pays, and the ability to stay calm, composed, and let the prices come to you. Okay? Let the prices come to you. That's it. That's all. Patience, in a few words, is let the prices come to you. And that's why, when I say that I'm mostly long, right? I'm not buying at any given moment, right? I'm not like, this is the market right now, which in my opinion is somewhat overpriced, and valuation wise is also a little bit more elevated. And technically, of course, we've talked about this, how overbought and overextended this market is. So what am I employing right now? What am I doing? Like, I'm being patient. I'm letting the prices come to us. I'll give you another simple example, right? So Dubai real estate is what I'm planning to invest in. Okay, so I've been studying Dubai real estate market. I've got a video coming out on MoneyVest Real Estate channel where I will be going over the entire market of Dubai and what are some of the places within Dubai that I'm looking to buy in. I've been studying this particular market, right? So there's this one location in Dubai that I really like. Prices are somewhat reasonable, and rents are really good, so you can get some pretty good rental yield. But prices have increased significantly. So a couple of properties that I saw, one of them that was listed at 360. And the guy bought it at, in 2023 in August, right? So August of 2023 is when he bought it. And the price that he was selling it at, the unit that I saw, was $550. $550, okay? So if you do the math, $550 divided by 360, we're looking at an appreciation for that property of over 52%. 52% in a matter of 6 months. Not even 6 months. We're talking August, September, October, November, December, January. Okay, so 6 months. We're talking 6 months, a 52% increase in property values in one of the units that I saw. Albeit it was rented out. It was already rented out at a pretty good rental yield. But the bottom line is that I'm not going to pay that much. Like, there's no way in any way, like, I'm going to be paying that much prices, 52% premium in just 6 months. So what I do is that I wait, I look for better opportunities. There's going to be other opportunities in the market that are going to be better value, that are going to be better deals, better discounted. So what do? I study the market. I look at, price per square footage. I look at what, is it furnished or not, depending on chiller, like rents and a lot of different things that I look at, of course, analyze the property. And then I put in an offer, right? The best thing about real estate is that you can put in an offer, they can reject it. The worst they can do is they can reject it, right? You've got nothing to lose. Just like that, in the stock market, you have to be patient to wait to put in your offers. Right? For any stock that you're looking at, you have your intrinsic value. You understand what it's worth, right? You understand what's the fair value of that stock. Just like you're analyzing a real estate deal, you understand what's the actual true value of that property. And you put in an offer. You put in that offer. You put in buy limit orders. And if the stock price comes down to that level, great. If it doesn't, you have nothing to lose. Yes, there may be an opportunity cost, but if the stock price or whatever, the real estate is already overpriced and overvalued to begin with, do you really want to be a part of it? Do you really want to be a part of that entire sort of trade or that deal? I personally don't, right? I'd much rather be patient and be 100% concrete, sure, confident that this is something that I really want to be a part of. This is an investment that I really want to take advantage of and I want to be a part of. I want to buy this. So patience, folks, is really, really important. So, if you come over to the markets here, we've talked about this multiple times, but markets will give you an opportunity to buy. They will, okay? It's just a matter of being patient. On the long side, like going long and starting to dollar cost average and buy and deploy cash, markets will give us an opportunity. It's just a matter of being patient and understanding that when is the right time to start dollar cost averaging into. When volatility is high, when there's a lot of fear in the market, when you actually start feeling that nervousness and that anxiety, and that level of fear that, okay, is this the time to actually be buying? Everybody's selling right now. Boom, right there. That's when the fear is at an extreme. That's when prices are coming down. That's when you're getting a discount. That's when you know that, okay, when people are selling, they're selling out of fear, not out of logic and not out of objectivity. That's when you start to kind of swoop in with your smart, composed, and calm mind. And that's exactly what you were waiting for, right? Patience, letting the prices come to you. You know it's a good deal because it's an asset. So that's what I wanted to address in this video, because I often get all these questions, when is the market going to drop? When is the volatility going to go up? Like, bottom line is, that's not the questions you need to be asking. Simple questions that I am asking myself is that right now, is it the time to be buying, selling, or holding, right? And for me, it's not the time to buy personally. I'm not looking at dollar cost averaging aggressively here. I'm patiently waiting for when the markets do give us an opportunity to starting to pull back here. Valuation is a little bit better. We're not as overbought or overextended here. Volatility is a little bit higher, and that's going to give us that discount window, that buying window, where I will start dollar cost averaging once again and start deploying cash. So again, all those alerts, everything's going to be in the Discord here. So if you want to join, of course, be a part of our MoneyVest community, link's going to be down below, and we'd love to have you on board. And as always, happy investing, and I'll see you all in the next video.